take a look at Zenith Bank's full-year results. We spoke earlier with Udom Emmanuel. Now, he's the CFO of Zenith Bank. We had ABN's Wole Famurewa speaking to him. Take a look.
The effective tax rate this year gave us a whole lot of credit due to mainly two reasons. Number one, if you look at our balance sheet, 42% of our balance sheet is mainly liquid assets. These are government treasury bills, government bonds, and due to the exemption in the tax law, and income on those government bills and bonds are tax exempt. Yeah. So it made our taxable income this year to be quite low. Secondly, because of the deferred tax asset from collective impairment of close to about 17.7 billion that we had this year. So we had a deferred tax credit, which was a reversing trend from what we'd had in the past 3 years. So that actually gave us some tax credit. So what you're seeing in the financial statements is what the law allows, which is minimum tax charge, right, which is being reflected.
Well, it's certainly a boost to the bottom line this year, but the key question is how sustainable this is. It seems to be a one-off. Your thoughts on what the effective tax rate will be in this year?
Certainly, that's why I call it a trend. I mean, on trend analysis or things of deferred tax in nature, it doesn't happen every year. And even if we do not have such tax credit in the current 2013 year ending December this year, we believe our effective tax rate will still be good because the bulk of our asset is on liquid assets. And government had actually granted tax exempt on income from those liquid assets, mainly treasury bills and then government bonds.
Okay, so everyone has made a lot about Zenith Bank's conservative investment in treasury bills, and the loan book grew about 10% this year. What can we expect, though, in that respect for 2013?
During the same time, the beginning of the financial year, we made a promise that conservatively we'll try to do between 10 and 15%, and we almost made 11% during the year. One thing about the loan growth, or probably when you look at the loan-to-deposit ratio, within the same period, we also grew our deposit by almost 17%. We are a very conservative bank. Everybody knows that. And because of also the nature of transactions in the Nigerian financial market that are a little bit short-tenured, a position balance as at year-end might not necessarily determine the volume done during the year. However, between 2013, we are hoping that we should be able to continue with the same trend of between 10 to 15%.
Okay, let's move on to the issue of your cost. I think positive, to some extent, one would argue that that tax credit played a role there as well, but your cost-income ratio clearly has come down quite significantly in this financial year. What can we expect going forward in this respect?
We expect to continue with our cost control measures, in summary. In the past 2 years, we've made deliberate attempts to make sure that we actually put our operating expenses under control. Because in a trend or in a situation where probably you cannot grow your revenue as much as you would want to, you need to also look at the cost. And there are a lot of other cost control measures that we've actually put in place, as we promised at the beginning of the financial year, that are beginning to pair off during this year. And we believe that this trend should continue in 2013.
Okay, now let's move on to another big issue. Clearly some policy moves from the central bank. There's a plan to phase out the very popular COT, Commission on Transactions in Nigeria. This is something that has been very, very important in terms of boosting revenues for quite a few banks. In fact, some people argue that as much as 20% of profits before tax of some banks can be accounted for by this line alone. Now, we know that you do quite a few transactions with corporates. What's the likely impact of this going forward for Zenith Bank?
If I tell you in the next 3 years it will not impact on the banks, I would not be saying the right thing. However, within the first 2 years, we don't expect the impact to be that significant. The reason is very obvious. If you look at who are the customers of Zenith Bank, these are mainly large corporates. An average large corporate customer today is paying you less than the regulatory, or probably, let me call it the agreed guide to bank charges, which is 5 per mil. So many of them are actually on the average between 1 and 2 naira. And if you look at this current year, we're allowed to take on 3 naira. Next year, 2 naira. A year after, 1 naira, and then the thing will vanish. So we believe within the first 2 years, the impact will not be that significant on our financial statement. However, going forward, we believe that there would be other areas in which banks will make money. Volumes will increase, transaction, charges will also come into play, and we believe that bearing any unforeseen circumstances, the bank should be able to at least maintain the
so
trend.
talk to us about your targets for return on equity in 2013. It's definitely got a huge boost from this tax credit, but what can we expect for this year?
Last year, we said that conservatively, we should be able to do between 15, in the region of the high teens, in terms of return on equity. And we'll be able to do about 23%. And I still say so within this economic, financial market, that if you are on the upper teens, you've actually made a good return. I still want to commit that we'll still be in the upper 10, and if practicable, then we'll now beat that upper 10 record. It's always better to, under-promise and over-perform. Like we did in the just prior year, just year ended 2012, and we promised the upper tens of, say, between 17 and 19%, and we delivered 23. We believe we should be able to at least maintain this trend in 2013.